Good evening, peoples. Let's jump in here on Misty and MSTR. A little good news. I know it's not easy to sit here but I have a slight good news. Again, it's yin and yang. What's good for one side of our situation sometimes is bad for another. So let's talk about the price movement on 828. Um, so we were down MSTY, Ms. Misty 4.67, and MSTR was down 5.66. So it's a little unclear again. And I think nobody knows short term what BTC is going to do. But in fairness, I still am bullish on that. I guess I've just learned firsthand and watched the flaws that exist in these income funds, right? I mean, I defended them initially and people said, oh, well, all they can ever gain, they're limited to 15%. Again, guys, as a reminder, if they write a call out 5%, if all the underlying does is go up 5%, then they still win that call, right? If it's 148 and they end up at 148, they can buy it back for 5 or 10 cents and they've got a 93% win. So they got all that money. It's when the underlying moves up 15% and they wrote a 5% call, then they get destroyed because they lose maybe 3 weeks worth of income. So that's the whole emphasis on, I think, Jay and the team really looking at this and saying, hey, people flock to us, this high yield, high volatility. I can think of NVIDIA, I can think of Tesla, and I obviously Coin and MSTR, probably the 4 most popular funds. And Bitcoin was a big mover, hence, those Coin and MSTR. It's not, if you can't make income in a fast, high moving, uprising market, then you're never going to make income. We all saw the fallacy of Tesla, and that's predicated. There's nothing you can do, peoples, in a down market. If I said to you, I don't care if you're going out to Round Hill, the pretty boy and girl in the dance or in high school right now, right? You got QDT and XDTE. They're both doing pretty well. The NASDAQ one has a little more NAV erosion, but it's paying a higher yield. And remember, I always tell you, it's all about total return. So if I've got 30% yield and I got a 10% loss, I still got a 20% return. So what's happened here in all of these is, I think the fund managers are stretched pertaining to Yieldmax. First off, they say active, but I see many errors. But I'm not here to beat up on that or talk about, just an education and a reminder that these things happen. Nobody likes it. So, I looked at it and I have, 35 years of auction experience. And I said, this is pretty cool. They're bringing what institutional people have to the retail public and charging 1% only for management fee. I'm in, because for me to deploy my capital, and my accounts are across 3. So I have 2 different tax deferred and 1 taxed account. And so having the amount of capital to go put on my own long synthetics when you're dealing with a micro strategy, now it's a 10 for 1 split, but when it's 1,700, 1,800, 1,900, how many contracts can I write based on how much capital do I want to put into that? So economies of scale said, hey, let these income funds do it, right? So then I sort of doing it every day. You see the warts. You see when it works. You see when it doesn't. But I still defended them when people said they're limited to a 15%. I said, no, if every week the underlying goes up the same amount they wrote the call, they won that call and their synthetic is going up that full amount. It's only when you get capped, and you get capped big time, that it hurts you. Now, obviously, in a down market, that changes everything. Hence, why I was talking about the prettiest girl and the most handsome guy in high school scenario with the weeklies. Everybody's loving weeklies. Hey, guys, get it? That's not the only thing. I get it that you want weeklies instead of monthly, but you should be happy if you're getting a 50% yield and it's monthly. Sure, there's nothing wrong with wanting it weekly, but first and foremost ought to be return. So I'm back to saying, how does that play out? As much as you love that scenario, what happens if next year the markets are down 8%, the S&P is down 8%, and the Nasdaq's down 12%? Oh, well, Bruce, it has an average of 8%. Well, how do you think it gets to 8% a year if there are 40% up years? There have to be some down years, right? It just, the math doesn't work. So I don't know what next year is, but I'm trying to preach to people to not just make the assumption, So again, how would I, if this was the death of Yieldmax, how would I look at the autopsy? How would I get up and speak about it? Okay, it's not. They're doing things and all that. I'm not even hating on Yieldmax. I'm just being honest and blunt with you guys, okay? I think it can be a tool that belongs in your portfolio. I've always said that. But for me personally, as an active investor with a lot of trading and option skills, and especially since those splits, I can do my own stuff. Get in, get out, not get capped. I'm not saying, here's the opposite. Let's say I go out and I buy MicroStrategy at 140 and I write a covered call, not even doing a long suck. I write a covered call. Well, if that drops to 110, I collected all my income, right? I got my 7 to 10% for 1 week, right? I got a great return. But now I'm somewhat, if you think about wheel strategy, I'm somewhat limited, right? Because if I bought it at 130, I wrote a 133 or something, and I collected a bunch of income. But now it's 110, so I can't get much, if anything. I might get 50 cents, and if I go out a week and I try to, or 30 cents, and try and write a 130, a break even. Because I'm saying, well, if I sell it at break even, the first week I made money. So I start that whole process, and I've been there, right? So a down market hurts us in many ways. So I'm just saying, don't think you found the golden goose because you found a weekly pair and it's on the indexes. I would say this to you. If you have the mindset and you're a long-term investor, or you're younger and you're saying, yeah, but Bruce, the S&P 500 is going to average 8%, you are right. And if you have a long-term perspective and you want to collect your yield, that's great, right? I'm not going to tell you that's not true. But those of you that just go out and look at what it's doing right now, some of us and a lot of you did that in Yieldmax. Said, oh my God, I want this, right? And we look and we go, oh, JP Morgan, 20%. Yeah, who wants a 20% yield? I want the 80, the 100. But sustaining it long term, it isn't really feasible. There's going to be ups and downs, and there is no savior for a down market. And this is where I was going with Tesla. Tesla is the perfect example. I am particularly very bullish long term on Tesla. Give it a year, give it 3 years, give it 5 years. I just think that that stock may be 6 or 8x from where it is. Okay, but is an income fund the right way to play it? Well, let me give you the example. So it went 20x from $20 to $400. Okay, so by the time Tesla launched, it was a best guess. I don't know what the underlying, well, I could go look it up, but I want to say 220-ish. Well, it also was on its way to going to 100. So when you get in a Tesla, you start getting your yield and it's volatile, it's bouncing around, it's paying good. But ultimately, it goes to 100 for the low. You get destroyed in the NAV. That's exactly what happened, right? So you go back and you look at Tesla. If you bought it at inception and then you collected, last I looked, and it's probably got another month worth, but it was somewhere around $26 that it paid, okay, out in yield. $26, right? But remember, the fund should be 40 because you got half the shares when you had the reverse split. So it's barely positive in total return. I'm not even tracking anymore. It could be under, right? But what happened forensically? Okay, so it went down, right? You know you lost on that, but you got income. What happens when it turns and goes up? People say, well, then great. Now I'm going to make all that back. No. If it only goes up how far they're writing the calls each week, you will go right up. Your synthetic will move right up and your weekly calls will be your income. But what actually happened when it got from that 100, it did whatever it did, and not too long ago it ran to 270. It got capped a whole bunch on the way up. So that's why the NAV never recovered. So here's the net, guys. It's always important what the underlying is doing. If you find a stock and you say over the next 5 years that stock is going to average 12% a year and it's just generally going to go up, what, you know, put it in your growth and buy it. Or if you're really bullish, you know, buy it on the growth side and go back to your safe 12%. I mean, that safe is relative, but there are some safe funds. And get that idea out, unless you're an active investor that want to trade, that you can get 35 and 40% yield year after year after year by just being a passive investor and buying some product. It isn't going to happen unless you can figure out each year which product, based on what your model of the market's going to do. So this is that education about, I'm not saying don't buy these. I'm not hating on Yieldmax. I think it was an innovative product. If they get this call spread thing together, so when it does move, okay, what's the call spread going to do? The call spread is going to take the capping off. If it runs really high, okay, you could participate in more. However, the downside of the call spread approach, so your loss isn't horrible when it runs and gets capped, okay? Your loss is limited to how much you spend on the option. See, that isn't true in the naked weeklies. Okay, you collected 8 million, you didn't spend anything, you collected 8 million, but now you got to buy it back for 24 because it ran way past. Well, a call spread says I got a fixed return and I got a fixed cost. So your yields, if you do that on a Msty or a Coney or an NVIDIA while there's still high IV products, you're only going to get maybe I'm just making this up. Let's say your yield is going to be 29% instead of 60, 70, 80, but you're not going to get destroyed either. Right? So I think the idea that they're trying to put this in there along with those funds where they're targeting, you know, 12 or 20%. So I think the ultimate offering that's going to come out to us in the retail is going to be good. It's going to be better. But it's up to us to choose. These funds aren't going to say, well, I think, Susan, you should do this. They're going to say, Susan, if you want to higher NAV stability and a lower yield, this is the product offering we have. As far as that product offering, do you want to be on the S&P 500 that gives you a broader, you know, 500 stocks? Do you want to be in the NASDAQ 100? Do you want to be in Tesla? You know, hopefully they do it across that kind of stuff. But ultimately, you take responsibility, okay? But super high yield consistently just doesn't work, people, in a passive deployment. So that's my rant. That's what I'm telling you. Let's jump in here. Okay. So down 5.66 for MSTR, down 4.67. So what did they do? Well, there were a couple of trades. So some people bought more shares, not a lot, 100,000 more, but it was like 2 or 3 days in a row that people bought 100,000 shares. So they went out and they bought more of their 139. Now remember, they had a 139 when they were around 140. They went up to 150, came back to 140, and now we're down to 132. So they're able to buy and sell the put and gain a little income. And then you always know when they put on new contracts. If this would have been a sell, they would have been closing out because people sold out of the fund, a net loss, right? And then they would have had to sell something to get some income. So they got a little bit of income here. We also, kudos to them, but I mean, they're just doing their job here, but they did it. That's the key. They went and they wrote a 145 out to 96. Okay, so they added 500. Sorry, what I was going to say was another situation. So this is where we stand right now, just looking. Okay, I can go in a minute and show you the weekly. So we've got all 4 of these right, and we're all in a good position. I'll show you in my holding, right? Because we wrote a 148, we wrote a 146. Do you remember when the week started? We were at 150 last Friday. So I was like, oh my gosh, if this thing runs, we're screwed, right? We're not going to, we're going to be massively capped. Well, it didn't. It went down. So we're lucky. But there's the yin and the yang, right? We also want to win on that 139 synthetic. So we had a 38 million gain. We now have an 18 million loss. Again, those are paper, right? So this amount of money, though, doesn't make up from that. When you go from a 38 million to a minus 18 million, that's 56 million. So just in 2 days, right? 3 trading days, we're down 56 million and we have a 19 million. So we're down $3 on the synthetic side of the equation, but we're up 15 million on the calls, maybe 20 because we had a liability, but all we can ever gain on those weekly calls is what we sold them for. There's no ability to get any more. You just don't want to lose. So they wrote this one out at 150 and we're at 132. That's cool. These are the ones we need to win. So let's jump over there and take a look. Here's your summary. The blue represents this week. The orange represents next week, right? But look at this. Look how far out and how good a shape we are with 2 trading days on these guys. This is small potatoes. This is everything, right? And it's the furthest out. So you know what I'm going to say, some of you do. So let me go through holdings and show you this. So I made this one even a different color than I normally do with a black background. The small amount of money, it's the 500 for 9.6. But I let the total go here. It's so small it doesn't matter. Technically, this is 13.8, 52. Okay, if you want to be more precise. But we've captured 92.3. Well, you say, well, Bruce, one of them shows 90, one of them shows 81, and one of them shows 92.40. Well, look at how much this is, right? So that's why we've now captured 92.3% of all the income. If they would have taken it off today, I would have been okay with that. But I can tell you they better take it off tomorrow. Don't give BTC an opportunity in 2 trading days to get to 150, okay? Because even though if it gets to 150, we're still going to get it, right? We're still going to, but if it goes to 151, 152, we start losing, and we've lost all, even though these are small on our 146 and 148. This would be getting into a bigger loss. So that's, and they probably will. I'm seeing, I don't know if it's the fear of losing their popularity, but I am seeing a lot, right? People are getting it. You know, if I bought Misty at 35 and it's 23, I'm not particularly happy. And who knows what they're going to pay? I'll get into that in a minute. So as a reminder, and I think I missed one day on here because I haven't, you know, like I didn't report on Misty yesterday. But here's the idea. The last time I did, we had a 38. This would have been Friday, right? We had a $38 million gain. We now have an $18 million loss. And here we are, 23, 26. So we're 10 cents better than what it is. Well, Misty has high reputation, right? I mean, Misty has been just the king. It has never had a distribution under $1. It barely, I think, was in the dollar range, right? Let's go take a look at that in a second. So I know other people are saying, I have a feeling they're going to pay $1. You know, when you start losing your kings and your queens, you know, your chess game is over. And I think here that Yieldmax is trying with these call spreads, but remember, they can only do it on the new funds. They have to go reapply on the old fund. So between the market and between having a hard time to actively managing and the market isn't working for the product, and if you're operating on the script, that's a recipe for disaster. So I'm hopeful Yieldmax will get better, right? I'm hopeful that Yield Boost will come out and they'll do something. And everybody seems to be loving Roundhill. And that's nice when we're up. How are you going to like Roundhill if, I say if, we're down 18% or 15% on the NASDAQ and the S&P? How are you going to be liking it then? Okay, so don't ever think that something can happen. But smart people would say, well, Bruce, I'm in it for the long haul. The S&P over periods of time averages 8 or 9%, whatever the accurate number is, but that's pretty close. And I'm with you. But I'm talking about the person who just found out about some of these funds and runs out and throws their money at it and said, yeehaw, I'm 30, but I'm going to be able to retire at 45 now, right? Because I'm going to figure out how to get these outsized 50% yield every year. Good luck with that one, right? That's all I'm saying is awareness, understand. I mean, markets go through cycles, guys. Why do you think I always talk about cycles? And within cycles, there are sectors. I honestly think if you just go out and look at precious metals and gold stock, probably over the next 6 years, are going to outperform the NASDAQ and the S&P. It's not an absolute. Interesting, really. Maybe I should be in that sector. Yeah, duh. But that's what markets do. Markets giveth and markets taketh. And you have commodity cycles, you have big tech cycles. Yeah, I love AI. I mean, I was a tech guy. I understand most all of it. And I think there's going to be some winner stocks. Okay? But I don't think necessarily because of how far and how high we've run. We may have a final blow off top, right? Go up another 20% and then go down 40%. But I just don't see anything to sustain it based on where we are as a nation, as an economy, our debt, just all of the challenges that the country has. And I'm talking U.S., but it's not much different for a lot of other first world countries. There are challenges. And when your debt gets so big, you know, I just think the market is going to struggle, but not long term, okay? But just go back. I know it from the 2000 era where I figured that out. I made so much money in options. I thought I was going to retire by 2001. And 2000 just destroyed my stock options that were given inside the company, not just option. And I was saying, okay, I got to work another 10 years. What can I do? What sector is going to happen? I watched the NASDAQ go from 5,000 to 1,500. As soon as it started going down aggressively, I've said, there's got to be somewhere else to put my money. And I really got involved in commodities. And so all of these things have cycles, right? And so AI has still got time to run and it's going to do well. But if you think that just translates into all tech and the NASDAQ, for every winner, there's probably going to be 10 losers. And money shifts around. And the market is hard. So that's my lesson. That's my rant. And let me finish up on this with payouts. All right. So here's the ugly truth. We've got 49 cents. Now, that assumes we win this week, which honestly, guys, shouldn't be that hard, right? But that isn't very much money, 49 cents. And we should win all that. I don't see an issue with that. Okay, we could win 9 again, and we could have $1 over here next week. And that's probably what I think they're going to pay. I don't think anybody that says they're going to pay under $1, I don't believe it. Okay, I think they're somewhere in the dollar range. I can give them more accurate, going into the weekend. Because I want to see them win this week, and I want to see where they're riding for next week. And for many of you that know, I've been saying September should be ugly. I think the second week of September, really, we start down. We shall see if that bears out. Okay, and that's based on some cycle work and some things that I follow and see. And some of it I can't share. Okay, because it's proprietary. Some of it I can talk about. Everybody knows about September and October being potentially the worst downturns in the market have come in the month of September and October. You look at, and when I say crash, I mean a 15% or more downturn. I don't mean a 1929 crash. I don't foresee that. I don't see that. I see maybe a recession. Right? We're already getting revisions on employment numbers. I don't think we're done necessarily with the Japanese yen carry trade. That could rear its ugly head. How about some other things out there I hear rumblings on? What about a vaccine and a lockdown again and some of that kind of stuff to throw the election into a turmoil so that he can't have one? I mean, you name it, Ukraine, Israel, Iran, Taiwan, they're just, and again, I wish what I was telling you, because I always think of that term, climb the wall of worry. Sometimes the markets ignore all that. I really hope that's the case, but I've positioned myself for that not to be the case. Okay. So just giving you a heads up, I'm watching a lot in September. Okay. I'm not bad-mouthing Yieldmax. I'm telling you the truth. I think it's all funds. All funds have exposure. You guys forget that if you're in an income fund, you're in a stock. And if you're in a stock, you're in the stock market. Okay? There is no secret. There's no magic bullet that just avoids all of that. You got to hedge your risk. I did videos on hedging some time ago. And here's the other thing, peoples. Final thought. You cannot just go out and say, oh, okay, I'm long NVIDIA and I want to go buy dips. I got it covered. I'm going to collect both incomes, and no matter what happens, I'm going to win. Sorry to tell you, that's not entirely true. Okay, let me explain it. On the inverse products, okay, they're the opposite. So what do? Instead of selling calls, they're selling puts. Okay, so there's some strategies involved in the inverse fund that can get capped. They simply can get capped. They have a little protective situation where they buy a way, way out of the money call in case the thing just runs like crazy. But it's so far out that it would really have to destroy them because they have some unique things that are slightly different than the bull fund. But without getting into all those technicals in this video, it's suffice to say they can get capped. So if all of a sudden we just crash in the underlying, then you get destroyed in your income fund that you're bullish on, right? If NVIDIA, I'll pick that one. Sorry, I jump around with that. Let's say NVIDIA's there. And let's say NVIDIA drops to $60. The market goes down 18%, but NVIDIA just gets more destroyed because it's got a lot of leverage to the market. Well, if you're in an income fund and you're long, you get destroyed, right? Because your synthetic is like worth nothing. And you won your weekly, so what, right? But on your dips, you got massively capped. So you didn't capture. You're thinking, okay, it went down 30%. I'm going to get a 30. You might get an 8% gain because you got massively capped. Yeah, you went up a little. But all I'm saying, that isn't the way to do it. If you guys want to truly hedge these things, I know Yieldmax is doing it to sell you more products, and I don't blame them. If I was head of Yieldmax, I'd do the same thing and I'd present it the same way. But, you know, I don't have a stake in the game. I can be truthful, right? Sometimes I'm so truthful I lose subscribers. But at the end of the day, I'm going to be who I am. I'm not going to lie to you people, right? Just can't do it. So one final thought is, don't forget, that's where these 2x and 3x in some situations, ETFs that aren't even income oriented, can save your bacon. If you're truly worried about owning an asset that's producing income, yeah, it's like insurance money. If it doesn't go down and you bought that 2x bear, you know, it doesn't pay income, but it sure is a safe way to have some insurance if you drop a lot. So don't forget those. To me, those are, because a lot of you say, well, Bruce, I'll just go out and buy puts. Good luck with buying puts on these high IV stocks. It's like your insurance is like 35% of your investment on the other side. And so if it doesn't drop, you lost 35%. That's a big hit because these IVs price in so much premium on that. All right, guys, that's what I got for you. So if I had to guess today, I think we get paid $1 in Msty. Okay, it's not fantastic. It could be $1.10. It could be $1.11. It could be $1.08. I don't see it as a big number, but I'll tell you this weekend when I've had a little more chance here. But I do think it pays $1. I think it's built up enough income that they would do some ROC, return of capital. And if we get lucky and they get another big here, then they really have it in the weekly captured. All right, guys, that's what I got for you. Sorry for the long rant. I think listen to it, though. I think there's some words of wisdom there and some reminders. And sometimes people are so emotional. If I bought it at 35 and 2 months later or 3 months later, it's 23, I'd be, you know, upset as well. It's not like I'm ahead. I still have some Msty and I'm behind. I'm not massively behind, not when I add my income, but I don't like it either. But I've seen the writing on the wall for a while. Okay, peoples, that's what I got. Have a good one. This is not financial advice. I'm not a financial advisor. It's for fun and entertainment. Hope you were entertained. Okay, bye, peoples.